Hello, traders. Gary Wagner with the Silver Forecast here. It is approximately 9:30 a.m. in Honolulu, Hawaii. It is Tuesday, March the 8th, and this is the Daily Report. We do have silver modestly coming back right now, currently trading at 35.90, call it. And when we take a look at our 44-minute bar chart, that's the chart that we currently have up. As you can see, what we talked about yesterday was the fact that as this market came up higher, it did run into some resistance. We're going to look at this in a couple other ways. We had this rounded top that we had, and then we did see the market come down a little bit. But as you can see, is now, after trading back up and coming down, is now roughly halfway through this particular point. So in terms of resistance and support areas, I want to take a look at that in a little different way. What we are looking at is a weekly Henkin chart. And the Henkin chart, of course, is an average chart. I have added Elliott Wave. We'll talk about that in a little bit. But what I want to talk about now is the following. If, in fact, this market has found a little bit of resistance, where might we see this market go to? And what I've basically done is I've taken the low here that I'm calling the bottom of wave 4 to this top that we've had the other day. Do I believe that the fifth wave is over? No. I do believe it's going to be a complicated fifth wave, and therefore I think we still have some major room to the upside. And what I've done is a basic Fibonacci retracement. On the retracement, of course, we've got our low sitting here at 26.32, our high just above 36, and the most important numbers that you really want to look at are going to be our 23% level, which is 34.26, and then our 38% level, which is going to be 32.74. Now, this market could easily trade back down and then recoup and move back to the upside. That's not what I'm saying. What I am saying is if we find some sort of resistance in this area, my personal feeling is that the targets that we would look at in terms of entry levels have to be based at 23 and, of course, at 38% in terms of straight Fibonacci. Now, in terms of our straight Elliott wave count, and this is an intermediate count that we're looking at, my belief is right now that we have just entered the fifth wave. And as you can see, we had our last fifth wave or top, and this is back in April of 09. We then, of course, had a basic A, B, and C. We had a very, very long extended wave 1. Wave 2 is what is called basically a wedge. And a wedge, as you can see here, is going to be that triangle formation like that. And then the breakout like this. The one thing that I am delineating, traders, I'll be honest with you, is whether or not we're still possibly in 3, and 3 is a much more complex wave. And that's what I'm going to be working through the next couple of days. It's not going to really change the status in terms of what we do, but it will give me an idea of where I think that this most recent rally will take us to. And that's where that's going to be important. And then lastly, for today's report, I do want to touch upon that resistance that we looked at yesterday when I talked about this Andrews pitchfork. Of course, we're looking at a daily chart right now. It's a daily chart in candlestick formation. I have, of course, added our Andrews pitchfork, same one from yesterday, low, low, high. And I think that what I'm finding interesting, and I think traders, you have to agree, is that whether or not this market actually does go and take off from this point, the one thing that we can say without a doubt is that when it hit the top of this pitchfork right in here, without a doubt, we did run into some resistance. Now, the critical question is, how strong is this resistance going to be? Are we going to be able to take it out? Or, in fact, are we going to see a market which actually finds us as resistance that's insurmountable and we get a sizable correction? As you can see, this is the last 2 days' activity. Right now, we had that shooting star yesterday. We have a doji. Those are both figures of consolidation. They do not necessarily mean that the market's going to come down. And what I mean by that is that there have been many times in the precious metals, both gold and silver, over these last rallies where when I would typically look at a doji and look at that as possibly a top pattern, what we actually saw develop was that it was simply a resting point. In other words, the market was consolidating before continuing to move to the upside. So we're a little bit early still on this. I wish I could tell you, traders, we have a definitive top. What we do have is indications that we're running into resistance. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another report. Bye-bye.